Beta is a single-digit number that measures how a stock's price moves relative to the overall market. It helps investors understand the stock's sensitivity to market movements, and this helps you understand the potential reward and how risky that investment is. We won't go into the details of how beta is calculated with this video. That is for math and statistics geeks, of which I happen to be one. So if you want to learn more about this, please let me know. Now, in using beta, the stock market is defined with the number of 1, and the stock market is defined as the S&P 500. If a stock has a beta of 1, then that particular stock increases or decreases a relative size or value equivalent to the S&P 500. Now, FedEx is an example of a stock with a beta of 1.0. This means that if the stock market moves up 1%, then the investor can generally expect FedEx to move up by 1%. Now, if the stock market goes up 10%, then one can also expect FedEx to generally move up close to that amount. Now, what about the current darling of the stock market, NVIDIA? NVIDIA has a beta of 2.0. This means NVIDIA stock is twice as volatile as the overall market. And if the S&P 500 rises by 1%, then investors can generally expect NVIDIA to move up by 2%. But if the stock market goes up 10%, then one can expect NVIDIA's price to increase by a whopping 20%. Just as importantly, let's say the stock market drops 10%, then you can expect NVIDIA to take a pretty significant drop, somewhere equivalent to approximately a 20% decrease. In the first 3 months of 2025, NVIDIA stock dropped 43%. But from that low point at the beginning of April, the stock price then surged 100%. It doubled in value. Now, if one had been lucky enough to buy NVIDIA exactly at the low point of April 7th, you would have doubled your money. Now, this is why beta is used as a measurement of risk. By observing the beta, investors have an immediate understanding of the potential downside of a stock, as well as the potential reward. Then the investor can use this information to decide whether or not to accept that risk. Over the past several years, NVIDIA investors that have accepted that risk have certainly been rewarded, as NVIDIA is now the most valuable company in the world. Now, you can find the beta for any stock on most major financial websites and platforms. Yahoo Finance, Google Finance, MarketWatch, Morningstar, and Reuters are some of the major websites for this. Brokerage platforms such as Fidelity, E-Trade, and Schwab also provide this information by going into your account, searching for a stock symbol, and reviewing the summary, profile, or the statistics page. Now, it is important to periodically get an update for the beta factor, in that it does change over time. It doesn't change dramatically, but it does change over time. So to summarize, beta tells you how volatile a stock is compared to the stock market. It's calculated by comparing the stock's historical price movements to that of the stock market. It's important because it helps you quickly understand a stock's potential risk and the potential reward. I hope this explanation was helpful. If you have any questions about financial matters, just please let me know. Thank you. I'll see you again.